Here are 6 keynotes for the speech. The market does not beat you, your impatience does. Big money is made in the waiting, not the trading. Losses expose character, winning trades test discipline. Holding winners requires more courage than cutting losers. Overtrading is emotional weakness disguised as ambition. Self-control is the trader's only true edge. Short opening speech, approximately 450 words. There is one rule on Wall Street that separates the amateurs from the professionals. One rule that builds fortunes quietly while others chase noise. It is not about indicators. It is not about secret signals. It is not about being right all the time. It is about holding your winning trades. Most traders never learn this. They cut their winners short because they are afraid. Afraid of giving back profits. Afraid of being wrong. Afraid the market will turn and embarrass them. So they grab crumbs. And then they sit through losses with hope. They reverse the natural order of success. They let fear control their profits and ego control their losses. And then they wonder why their accounts bleed. The market is not your enemy. The market does not care about you. It does not know your name. It does not know your entry price. It does not know your rent is due. The market simply moves. The problem is not volatility. The problem is your mind. The problem is that you want excitement instead of patience. You want constant action instead of calculated waiting. You want fast validation instead of disciplined conviction. Holding a winning trade feels uncomfortable. You start calculating what you could lose instead of what you could gain. You stare at every tick. You imagine disaster. You sabotage your own position. The great traders understood something simple. The real money is not made in the entry. It is not made in the exit. It is made in the sitting. Sitting while the trend unfolds. Sitting while doubt whispers. Sitting while others panic out. If you cannot sit, you cannot win. If you cannot wait, you cannot grow. If you cannot control your mind, you cannot control your money. This is not about learning a new strategy. This is about mastering yourself. Because Wall Street's #1 rule is brutal. You must let your winners run. And most people do not have the emotional strength to do it. Full speech, approximately 4,500 words. There is a rule in speculation that is older than any exchange floor. It is simple. It is brutal. And it destroys most who ignore it. Let your winners run. Not for minutes. Not until you feel slightly uncomfortable. Not until you make enough to screenshot and boast. Run. That word sounds easy. It is not. Holding a losing trade is easy. Hope is cheap. Hope requires no discipline. You can sit in a losing trade because you tell yourself a story. It will come back. It's just a pullback. I'll wait. Waiting in a losing trade is passive weakness. Waiting in a winning trade is active strength. And most traders do not have strength. They have excitement. They have impatience. They have ego. They open charts like gamblers walking into a casino. They want action. They want movement. They want to feel alive. But the market does not reward adrenaline. It rewards discipline. You say you want to be a professional. But professionals do not chase every candle. They wait. They study. They strike when probability leans in their favor. And then they sit. Sitting is the hardest skill in trading. When you are wrong, your mind screams to defend itself. When you are right, your mind screams to protect itself. Fear is louder during profit than during loss. That is a truth most cannot accept. You think fear happens when you lose. No. Fear happens when you are winning and something valuable is on the table. Now there is something to lose. Now the numbers are real. Now the market can take something from you. So you take it first. You close the trade early. You lock in small gains. You feel safe. But safety is expensive. Every time you cut a winner short, you pay a hidden tax. That tax is opportunity. That tax is growth. That tax is compounding. The large moves pay for the small losses. One strong trend can erase 10 minor mistakes. But you will never experience that if you exit at the first sign of discomfort. The market trends far longer than your emotions can tolerate. That is why fortunes are made by the few. The crowd cannot endure discomfort long enough. You want to know Wall Street's #1 rule. It is not prediction. It is not speed. It is endurance. Endurance of volatility. Endurance of doubt. Endurance of temporary pullbacks inside larger moves. You must learn to separate noise from change. Every tick is not a message. Every retracement is not a reversal. Your job is not to react. Your job is to follow your plan. But most traders do not have a plan. They have impulses. They buy because something moved. They sell because something dropped. They call it strategy. It is emotion. Overtrading is not ambition. It is anxiety. You are not looking for opportunity. You are looking for relief. Relief from boredom. Relief from uncertainty. Relief from silence. Silence is where money is made. Not in frantic clicking. Not in revenge trades. Not in doubling down because your ego demands it. The market does not reward your need to be right. It rewards your ability to be patient. A winning trade is not a signal to relax. It is a test. The test of whether you can stay disciplined when the market moves in your favor. You start thinking about what you will buy. You calculate the profit in your head. You start to own the money before it is realized. Attachment forms. Attachment creates fear. Fear creates premature exits. If you want to hold winners, you must detach from the money. It is not yours until your system says it is time. Not until your emotions feel safe. You must trade the chart, not your feelings. You must trade probabilities, not fantasies. Every trade is a risk. Every position carries uncertainty. Accept that before you enter. If you enter with fear of losing open profit, you will sabotage yourself. You say you want big returns. But big returns require big patience. And patience feels like doing nothing. Doing nothing feels unproductive. So you interfere. You micromanage. You shrink targets. You tighten stops emotionally, not logically. You turn potential into mediocrity. Then you blame the market. You say it reversed after you exited. No, you reversed before the market did. The market is not against you. It is indifferent. Your real opponent sits in the chair. The voice that says, take it now. The voice that says, this is enough. The voice that says, what if it turns? That voice is fear disguised as prudence. There is a difference between protecting capital and protecting comfort. Professionals protect capital with rules. Amateurs protect comfort with impulse. If your strategy says the trend is intact, you stay. If your system says the structure holds, you stay. Not because you feel brave. Because you follow rules. Rules remove emotion. Without rules, you are exposed. And exposure leads to panic. Panic leads to mistakes. Mistakes repeated become habits. Habits shape accounts. Look at your account. It reflects your psychology. Not the market. Not the economy. You. If you constantly cut winners short and hold losers long, that is not bad luck. That is character. Brutal truth builds strong traders. Soft excuses build empty accounts. You must decide what you want more. Comfort now, or growth later. Because holding a winner is uncomfortable. The deeper it moves into profit, the more you fear losing it. The larger the unrealized gain, the stronger the temptation. You start bargaining. I'll just take half. I'll just close most of it. If it pulls back one more candle, I'm out. That negotiation is weakness. Either you trust your system or you do not. If you do not trust it, fix it. If you do trust it, follow it. Half discipline produces half results. Half conviction produces constant frustration. The market rewards clarity. You must know where you are wrong. You must know where you are right. You must know when the trend is broken. Until then, you sit. Yes, it will pull back. Yes, it will scare you. Yes, it will test you. That is the price. The market tests conviction before it pays. If you cannot pass the test, you do not get the reward. You think big traders are fearless. They are not. They feel the same fear you do. The difference is they do not act on it. Courage in trading is not loud. It is silent. It is sitting still while your mind screams. It is watching profits fluctuate without touching the mouse. It is letting the structure decide, not your heartbeat. There will be losses. Many. Losses are part of the business. But small losses are controlled. Large wins are nurtured. If your average loss equals your average win, you will struggle. If your losses are small and your wins are allowed to expand, you survive. Survival comes first. Growth comes second. Ego comes last. Ego wants to be right often. Professionals want to be right big. There is a difference. You can be wrong 6 times and still win if one trade runs far enough. But only if you allow it. Most traders sabotage the one trade that could change their month. They exit too soon. Then they watch it continue without them. Regret sets in. Regret leads to revenge. Revenge leads to overtrading. Overtrading leads to losses. Losses lead to desperation. And desperation destroys discipline. Break that cycle. The cycle starts with impatience. Impatience to enter. Impatience to exit. Impatience to see results. Markets move in phases. There are periods for action. There are periods for waiting. You must know the difference. If nothing meets your criteria, you do nothing. Doing nothing is a position. Waiting is a strategy. Silence is part of the process. If you feel compelled to trade, step away. The urge to click is not opportunity. It is emotion-seeking stimulation. This business does not reward stimulation. It rewards restraint. You must train yourself to think in weeks, not minutes. To see structure, not noise. To focus on process, not outcome. Outcome is random in the short term. Process is controlled. If you master process, outcome follows over time. Holding a winner is trusting process over fear. It is accepting that volatility does not equal failure. It is understanding that pullbacks are normal. It is refusing to be shaken out by routine movement. But this requires preparation. Before you enter, you define your invalidation. Before you enter, you define your target structure. Before you enter, you define your risk. Then you execute. After execution, you manage according to plan, not according to emotion. If your plan says trail under structure, you trail. If your plan says exit on break, you exit. Not because you are scared. Because rules say so. If you cannot follow your own rules, reduce size. Size amplifies emotion. Too much size turns small moves into panic. Trade small enough that you can think clearly. Clarity is power. When you are clear, you see the market as it is, not as you fear it to be. Holding winners requires mental capital. Mental capital is drained by overtrading. If you trade constantly, you exhaust yourself. Exhaustion leads to mistakes. Mistakes compound. Limit your exposure. Choose quality over quantity. You do not need many trades. You need a few strong ones. The market offers opportunity every week, but only to those prepared. Preparation means studying past moves, understanding how trends behave, seeing how markets breathe. They expand, they contract, they shake out weak hands. Then they continue. If you are shaken out easily, you are trading with weak conviction. Conviction comes from testing. Backtest your system. Know its statistics. Know its drawdowns. Know its behavior. Confidence without evidence is arrogance. Confidence with evidence is discipline. When you know your system produces larger winners than losers over time, you can sit. Because you understand the math. Without that understanding, every pullback feels fatal. And you exit. You cannot trade on hope. You cannot trade on fear. You trade on probability. Probability requires repetition. Repetition requires discipline. Discipline requires self-control. Self-control requires awareness. Awareness begins with honesty. Be honest. Are you cutting winners because the setup failed? Or because you are uncomfortable? Are you entering trades because they meet criteria? Or because you are bored? Are you increasing size because the system improved? Or because you want faster results? Your account answers these questions. Numbers do not lie. If you are struggling, look inward. Blaming the market is easy. Changing yourself is hard. But the market will not change for you. It will continue to move as it always has. Your job is to adapt. To become calmer, more selective, more patient. Holding a winning trade is an act of faith in your preparation. It is not blind faith. It is earned confidence. Earn it. Study harder. Trade smaller. Wait longer. Act less. Observe more. If you want large returns, you must think differently from the crowd. The crowd panics at pullbacks. The crowd celebrates small wins. The crowd trades constantly. The crowd complains. Do not be the crowd. Be still when others are frantic. Be patient when others are impulsive. Be disciplined when others are emotional. You will feel alone. Good. Independence is required. The market does not care about your feelings. It cares about supply and demand. About structure. About momentum. Your feelings are irrelevant to price. Remove yourself from the equation. Become an executor of rules. A manager of risk. A student of behavior. And above all, a guardian of patience. The number one rule is simple. Let your winners run. But simple is not easy. It demands that you master your mind. That you endure discomfort. That you accept uncertainty. That you trust your preparation over your impulse. If you cannot do that, no strategy will save you. If you can do that, no temporary loss will break you. Strength in trading is quiet. It is not loud predictions. It is not flashy profits. It is steady execution. It is consistency. It is resilience. Build that. Protect that. And when the next winning trade appears, and it moves in your favor, and fear begins to whisper, and your finger hovers over the exit button, remember this. The market is not testing your strategy. It is testing your character.